everyone. Thank you for joining us today. I'm August Biniaz. I'm joined by Eva Benesocky. Welcome, Eva.
Thank you, August. Hi, everyone. Today, we're excited. We're joined by David Wallach, president of Barclay Street Real Estate. So welcome, David.
Welcome, David.
It's a pleasure being here, wearing both hats, Barclay Street Real Estate, which is a commercial real estate brokerage, and Triumph Real Estate Investment Fund, which is a private REIT that I founded a few years ago.
Great.
Incredible.
Great.
Incredible. So why don't we start off, David, by you telling us about your start in commercial real estate, and talk to us about your journey and how you started in this field.
Well, it's a great question and interesting story. Sometimes God has his mysterious ways. And when my wife and I immigrated with our 3 kids back on December 28, 1998, it was plus 25 when we left Tel Aviv and minus 18 when we landed here, same day. So
wow.
What happened is that the Canadian Immigration Ministry lost my medical exams that you have to do medical tests when you immigrate. And as a result, I couldn't get my work permit. So I was just driving around the city and looking around Calgary. And at a certain point, I remember I told my wife, it seems to me that real estate is doing really, really well here, and it's just going to continue to boom because the city is growing. So I, met a couple of guys that I knew through other kind of, community events, and I asked them about real estate. And and then I decided to go and take the real estate course. And I took the real estate course without even yet having my immigration paper, because I had to do the medical tests again, and they had to send it to Tel Aviv, and from Tel Aviv to Paris. And Paris, they check mark that I'm healthy, and then back to Tel Aviv, back to Ottawa, back to Calgary, and then I got the permit to work a year after we actually were here. And so meanwhile, I got my license, and then I decided that I'm going to commercial real estate rather than residential. I like to work with business people, and I like to deal with business deals. Residential is more of an emotional deal when you broker deals. I'm not talking on the investment side, I'm talking on the brokerage side, because I started as a broker. And on Valentine's Day 2000 was my first day in real estate. I joined a company that I now own. It was Torod Real Estate at the time, and now it's Barclay Street Real Estate.
Great,
Incredible.
wonderful, great story. So at that time, what was the price of oil at that time? Because around the same time here in Vancouver, this is in the late 90s, the real estate market was terrible. We had a huge amount of immigrants that came here from Hong Kong who were afraid of mainland China taking over Hong Kong after the lease was over with England, and they started going back. So as soon as they started going back, real estate just flopped here in Vancouver. It's a very difficult time for jobs, for real estate. So it's interesting to see that in Alberta was actually the reverse.
Well, the oil price, the barrel was hovering between $10.50 to $11.50. So it was zero. It was 49 cents at the pump at the time. And but since then it started kind of a constant and continuous climb over the years. But when we immigrated in '99, it was hovering between $10.50 and $11.50 a barrel.
Right.
At the time, Calgary was still cheap, but you can tell that it's in growth mode, and that's why I saw the potential of the commercial real estate side. Don't get me wrong, residential did as well, very well in the last 20 years in Calgary as well. But my kind of being a broker, I came from a brokerage background. I had my insurance brokerage back in Israel before I immigrated. So being a broker, I decided to go to business, to commercial rather than to residential. But both market, the residential and the commercial, were kind of before the big explosion, and then they exploded in 05, 06, 07.
Got it. Great. Yeah. So So kind of an interesting journey as well, because me and Ava, both our background is in real estate as agent. We started out in real estate as real estate agents, and in your case it was the same thing. And you kind of moved on to commercial side of it. And tell us, how did your start come into the private equity side and the capital raising and the fund kind of creation fund, the managing of funds, if you may.
So during the years when I was working as a broker, I had a few clients come to me and say, we would like to buy, but we would like you to get involved. I think for two reasons. One is they want to see that I don't sell them, the dogs and the fleas. But the other thing is those guys are guys that don't work in real estate. They are not real estate people. They just wanted to invest in real estate. So they were looking for someone that will do all the, hard job and put the hands in the mud and do the leasing and the property management and fixing everything. So that's how it started. So I've done a few syndications. And we kind of tapped with everything, industrial and office and retail. I did one residential development and I said, never again. I'm never going again to development. Every city employee would afford can come and stop work. And I said, yeah, I'm not dealing with contractors and subcontractors and engineers and all that kind of equation of doing development from ground up. So I focused on buying revenue producing properties. We did really good on our returns, exceptionally good on our returns. And the person that suggested that instead of doing one syndication at a time is building a fund was basically my real estate and business lawyer. Because that's what he does for a living, is mostly private placements and private REITs and private companies. So he was the one who suggested to do a fund, which is a trust. Ours is a trust, so people can use it for RSP, TFSA, and all other tax-deferred programs. And so I did about 1.5 years of research, and that's where Barclay Street comes to as an advantage, because we have here a lot of information at our fingertips. Where Barclay, being a privately owned brokerage, we are part of a group called TCN, Worldwide Real Estate Services, with offices all over North America. So we were able to get a lot of information from other markets and define the markets we want to be active in. And so we're not buying all over North America. We have defined markets that we are focused on, and that's how we started the fund. The first fund was launched in 2014, and we closed it 2 years ago. We raised $21 million, and we bought 9 properties. Out of the properties, 5 were in the US and 4 were in Canada. We already sold one.
These are all commercial revenue producing properties?
All commercial. Or we do not buy multifamily. We do not buy hotels. We focus on a mix of industrial, office, and retail, what's called the neighborhood shopping plazas. So we mix it because the market can be a perfect example. It will be today the Alberta market. If you look at downtown office, you don't want to touch it with a 10-foot pole, but if you look at industrial, it's doing very well. So each market has its pros and cons in terms of the subcategories, or what we call the market segment. So that's why we diversify between office, industrial, and retail in different markets.
Awesome.
Genius.
Now, David, of course, you're managing a fund. Our group here at CPI, we're a syndicate, so we're deal specific. So we raise capital per deal. Now, we're not a fund. Can you explain the structure of how a fund works here in Canada?
Well, basically it's a trust. So the people buy trust units. The trust has a limited partner below the trust, and all the money when we do what's called a closing. So we have a closing next week. We have a closing after RSP season in March 1st. So all the money that we get, the people get trust units, so they get revenue from all the properties. It's not per one property. So the whole basket of properties is one kind of I would say it funnels to everybody, and then so the money goes to LP, and then the LP does the acquisition, and the LP has a GP, which we have 3 independent board members, very strong independent board members, and I have a partner which is a lawyer, so we are 2 kind of that do the day-to-day operations. And every property we buy, we have an LP and GP for that property, and that is to protect the investors and the property in so one property is not connected to the other if there is a mortgage problem or anything. So it's a structure that goes all the way up to the trust. So when we do the quarterly distribution, so we collect all the money from the different LPs, from the different properties. It goes to the mother LP, which is Triumph Real Estate Investment LP. And then we send the money to the investor from the trust. So that's how it's kind of a pyramid.
Okay, very cool. Now, could you explain to us how the fees associated, what are the fees like associated with the fund? As the fund managing team is the operator of the business, they need to be compensated. So what are the fees involved and how are these fees structured with your fund?
So as I said this morning when we had a conference call with a big investor from Toronto, that our fees are too small, too low. And he had a smile on his face. So the way we work our fees is very simple. So from the money raised, the GP gets 2%. And then on financing on this position, we get 1% on each one of them. And that's all our fees. What we have is profit sharing. So we have preferred return to the investor of 7%. So it means you have to have all your money back when you're out of the fund. You have to have all your money back plus 7% per year that you are there. But that's not enough, because then where you ask, where do I make money? I make money if I go over 7% return to the investors. So above 7, between 7 to 12, 70% goes to the investor, 30% goes to the GP, general partner. Above 12%, it's 50-50. So it's kind of a scale, and it's per year. So my motivation is to go above 12, 15, 16, because that's the only time I make money. So that's my motivation. Yes, I'm an investor in the fund, and I have me and my wife and my kids, we're all invested in the fund. I have I raised by myself about 17% of the first fund, or 18% of the first fund, from clients, acquaintances, and myself. So we're kind of, we get everything that the investor gets, but the profit sharing is, my motivation is to get to returns that are above 12%. So and that's for the fund itself, not per property. So the first property we sold in Fund 1, on that specific property, the return to the investors was 19.3% per year over 3.5 years that we were holding that, because our fund is based on income and growth. So it's kind of a value add. We buy it with enough income to pay the mortgage, pay the property management, and have enough money to pay quarterly distributions. But a big chunk of money comes when we sell, because what we did is we bought it with a little bit vacancy. We increased the rents, we filled up the vacancy, we pay down the mortgage at the same time, the principal, through the tenant's income, through the income from the tenants. And then when we sold, that's where the big profit came to. And it was nice to get when the investors got that check. And it's interesting, we got the check January 23rd, 2020, so a month before COVID hit. Oh, wow. So we were lucky, and it was nice to get emails and letters from investors. Thank you. It was a nice surprise because they got a nice check.
That's fantastic.
Great. No, that's wonderful. And just wanted to discuss. So I want to take a step back. So just about your journey. So you start as a broker, come here as a new immigrant. You focus on commercial real estate. Then a good friend, I wish I had friends like yours, a good friend of yours, the lawyer fellow, explains about this concept of funds and raising private capital to be able to do it. So between that process, though, you're being an active investor. You're actually looking for deals and you're purchasing deals. You do commercial and residential. So you kind of have the experience in that, and then move on to building a fund. And then tell us about your, you currently, you have, your focus is the fund, but you also have another company. What is the function of that company and how it plays in with the fund that you currently have?
Twofold. One is a lot of information, a lot of free information that other funds used to need to pay for. I get my fund gets it for free because Barclay Street already pays for it and needs it for our day-to-day work. So a lot of free information. When we bought in Phoenix, we bought in Denver, and we are looking now, we have a building under contract in Dallas. Those are the three markets where that we are kind of focused in the US. In each of those markets, we have TCN affiliates on the ground. So the TCN is affiliate of Barclay Street, not of Triumph. But that's how we get that. And the first question I ask them when they bring me a property is, are you putting your money with us? And if they say yes, we go ahead. If they say no, it's a bad area, blah, 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 I go, oh, okay, so don't show me that one. We get a lot of information from them on the ground. They are not just our boots on the ground, they are our ears and eyes. And that is through the Barclay Street connection. So Barclay Street has a lot of information that Triumph uses for free. And of course, you know, here we have a building here in Calgary, right? We have a building in South Airways, an industrial building with office. My guys know it's my building. So when it comes to listing the property, they take care of it. So that's how that synergy works, right? There's a lot of communication between Barclay Street. It's mostly one stream with information and work that Barclay puts into Triumph than the other way around. So that's how we work together, and it works very well.
Great, wonderful, wonderful. And just I got to quickly tell the story of how me and David met. We just coincidentally connected on LinkedIn, and usually people who are you know, they've been in a business for a long time, they get, I don't want to call it grumpy, but they're very focused on what they're doing. They're not available. CEOs are never available to chat. And he was so open. He was right so away, available. Yeah. He had a long chat with me on the phone, and we, you know, I said, hey, David, you should be, you know, my mentor in some ways, and I can call you once in a while. And it's been great friendship. And now the reason I'm saying that is because the fees associated with his fund are low, and that comes from me because we see many funds, we work with many other syndicators and groups, and we're very familiar with fees because we want to be competitive in the market that we're in as well. And your fees are very fair, so that just speaks about the person that you are. So I can attest to that. Yeah, if you'd like to say anything about that, go ahead, David.
Well, you know, it's fund number 2 now, and as I said, I invested my own money where my talk is. And I think that's the key. And for me, it's a long-term journey. I don't see it as, you know, one and done, or, you know, get me my pound of flesh and I'm out of here. I see it as my next 15 years doing this. So that's why if I make money, it's only at the end. So it's 1% when I sell, or profit sharing when we sell, and the investors get all their money back and their, you know, return. Right. And that's, for me, it's a long-term journey. It's not, as I said, it's by the way, it took you some time to get me to answer. Now you're being nice to me, but because honestly, I get daily at least 12 requests per day to talk with me about something. But you were persistent and you're annoying, so I had to answer to get you off my back, and that started a great relationship.
Absolutely, absolutely. I look forward to learning more from you.
Persistence.
Absolutely. Yeah, and now let's get the focus on. Let me see here. If you had a question here, Ava.
Yeah, I wanted David to go ahead and maybe explain to our viewers what an exempt market dealer is, and does your fund use the services of an exempt market dealer?
Or like
we raise more,
or broker dealers, people who are involved in the money raising part of funds.
Yeah.
If you.
So we work with 2 kind of avenues. One is I raise a lot of money, And then second is the exempt market dealers. The exempt market. So our REIT, our real estate investment trust, is not listed on the public market. We have to comply with the regulations. We have to file everything with the regulator, the Alberta Security Commission or Canada Security Commission. We have to comply with everything. We have to put everything on CEDAR, but we don't go through the what's called the banks or the IROC or the. So there's a whole market that is called exempt market dealers. They all have salespeople that are called dealing representatives. And those are the guys that are basically, if we can translate it, they're brokers. They call their clients or prospects and they share and they should go and do kind of their spiel or their sales pitch or do an analysis on whether someone needs for retirement or any other reason to invest. And then they offer a few, and I'm not the only fund. There are a few funds. There are many funds, and they offer, for example, if you want your money in the next 12 months, Triumph is the wrong place to invest because commercial real estate is a long term. It's minimum 3 years and probably 5 or 6 years. So if someone needs money for short term, I always say, don't bring them to me. It's wrong. You're not giving them good service. So there are different funds, short term, mid term, long term, and those are going all through the exempt market dealers. It's a growing industry. The whole private capital or the exempt market is a growing industry, and I see that as continue to grow over the next few years in Canada. We raise 99% of our money in Canada, coast to coast. We don't raise money at all in the U.S. because of tax issues and different regulations they have. We have investors. We had in Fund One from Romania, Germany, Israel, United Arab Emirates. So we had a few, but we have, as I said, we have an offering memorandum and we have to sell by the offering memorandum, and we have to comply with all those rules. We have to submit, we have to do every year a third-party audit, which is now taking place for 2020. And we have to submit that audit to the regulator by April 30th. So we follow all the rules, but we're not on the public market. You can't see our shares or units on the public market. You have to find your exempt market dealer or your dealing representatives to invest in fund like Triumph.
Got it.
Right.
And are your funds open-ended, or is there a term? Is there a term for the fund itself?
We have a term. Fund number 2, if I can remember correctly, is 2026. We have an option to do a 2-year extension, and the reason we always put the 2-year extension, a perfect example is last year. COVID hit, and you don't want to sell during COVID because everybody is discounting whatever, and there were 4 or 5 months that no deals were done. Nobody was buying or selling because nobody was financing. So since you don't know where the market will be in 3 or 4 years, you have to have that kind of cushion of, so the GP has the right to increase in 2 years. But as I mentioned earlier, we sold our first property 3.5 years after we bought it because the opportunity was right. So we didn't wait for the end of the fund. We said, which is 2022, Fund 1 ends in 2022. We just said, okay, this is the right time to sell. Let's sell it. We're now looking to put 2 more properties on the market in Q2 of 2021 because we see that ball start to roll in terms of deals and transactions and banks that are sitting on a lot of cash and need to deploy it with mortgages.
Got it. And I always like to, in this world of private equity and funds and syndications, where the sponsor, the operator is their feet is to the fire to make sure that the deal makes sense, so then they can get a portion of the profits. That's an amazing system. And I compare it to imagine working with a real estate agent and that in telling that real estate agent, hey, I'll buy this property. You have to manage it for me. You have to get the mortgage, oversee it, and eventually sell it. From the profits that this property makes, I'll give you 30%. that's pretty much what funds and syndication in this world of real estate private equity does, as long as you partner with the right team. So wanted to quickly mention that. And also I want to talk about David, about the elephant in the room.
Yeah.
So and that is COVID. Earlier you spoke about, even within your fund that's focused on commercial real estate, you've diversified, where a portion is for office, a portion of it is for storefront location, and another one is for commercial. But let's discuss COVID and how it's affected you. I would say you're in the epicenter of a province, of an area that's been affected mostly not only by COVID, but also by a bad economy, a certain type of government they have, NDP, and also oil prices where at some point went to negative. So all of these issues must have affected you greatly. And if you can weather through the storm here with what's going on, I am definitely your believer and disciple, and I 100% will diversify a portion of my portfolio to be invested with you.
Absolutely.
So COVID was a great experience. It wasn't pleasant, but it was a great experience. And I had today, we put an offer today on a property in Colorado, and I had a conversation with our lender, Bank of the West, in Colorado, that they have already 2 of our properties, and they're looking to give us more money. And why do I say COVID was a great experience? Time of challenge is the time that you really kind of realize how you're doing and how you're reacting or acting or taking initiative. So as soon as COVID hit North America, we took initiative, and the board made the decision. We called the board meeting, and we made a decision. Every tenant that is asking us for help, we're going to help. The very, very basic, simple reason is way cheaper to maintain a tenant than to replace a tenant.
Okay.
So that was our rule number 1. We are trying to help each and every tenant that asks for help. So we didn't send a letter to all the tenants, we'll help you, but we told all our property managers, and I was almost on a daily contact with all our property managers. We have 4. So every tenant, and we had 9 tenants in the US portfolio and 8, I think, in the Canadian portfolio that asked for help. So we said, we are going to give you a deferral on your base rent. You have to keep on paying the operating cost because you want us to maintain the building running. Then we went to the banks and say, we don't want deferral on our mortgage. We want deferral only on the principal. That was long-term thinking, because we know how banks operate and how they think. And we knew if we'll be the good guys, when we come out of COVID and we see opportunities, we will get money. So we got an agreement with all those tenants. We sent them a letter, say you have 3 or 4 months, depends on the tenant, deferral on your base rent. And we gave them between 8 to 12 months following to pay back the deferred program. So they, come August, they had to pay their current rent, and they had 8, 9, 10 months, each one different, to pay what their arrears was, the 3 months of deferral or 4 months of deferred base rent. That helped all of them. We didn't lose, because of COVID, we lost 1 tenant out of 110 tenants in March. And guess what? It was a municipality. So it was the city of Spruce Grove. So that was number 1. And we made sure that they all know that we're there all the time. We connected with the banks on a bi-weekly basis. We connected with the tenants on daily, weekly. Every time they needed us, we were there. So that was kind of how we dealt during COVID. I can tell you that now everybody is paying their rent. Almost everybody is paying their arrears to the max, or we almost collected everything. During COVID, we renewed 2 big tenants, national tenants in the US, for 7 years.
Wow.
With no discount on the market rents. The key was, stay in touch, being in front of people.
Question, David, what type of business were these tenants who renewed for 70? What kind of business was that?
Good question.
They were in?
One is a restaurant. There's a chain in the US called the First Watch, and they renewed for 7 years, and I'm talking over $30 net for 4,000 feet. The other one was Supercuts, or the hair salon, the national kind of franchisee hair salon. Since then, we renewed more. In Calgary, we just expanded 3 tenants that during COVID, had to shut down. We just expanded them, but we were always there. We were always replying. We were always visiting them. We were always making sure they know we want you to stay in business. We will help you. So in the US, they had the PPP program. In Canada, they had the Canada whatever it's called. Yeah, whatever it's called. So we took a hit for 25% on some of the tenants, but we did it, and we didn't lose those tenants. So now we got back everything to normal. They get now directly from the government help without the landlord contribution.
And was there any subsidies that came to you guys as the operators in any way?
No, it went to the well, when the Canadian government had that program for a few months, that 25% I had to reduce my rent, the government donated 50% to me, and so then it came to us, the 50%. But then now it's only directly between the government and the tenant, and they have to pay full rent.
Got it.
And if you remember, I mentioned that we were in contact with the banks, and our thinking was long-term thinking. That's why we asked for deferral only on the principal and not on the interest, and we kept on paying the interest, and we kept on paying all the property tax. We closed, coming out of COVID, we closed our first deal in October. We got 6 proposals from banks to finance us in terms that, banks are still not there completely. We just waived on Monday, I waived on a property here in Calgary, brand new construction, 10-year leases. We didn't announce it yet. We got offers from banks in Calgary as well. We talk about bricks and mortar, but at the end of the day, it's a people business, and it's how people react and how people treat each other. And that's why when I put an offer today in Colorado and called Bank of the West that already gave me 2 mortgages, and I thought they would say no, let's go.
Congratulations.
That's great. That's great.
Well, we're not there yet, Eva.
Well, I'm putting the good energy out into the universe.
Eva has a quick question for you here, but I'll just gonna quickly ask you now, moving forward, again, diversification is key, but moving forward, tell us what you're bearish about, what you're staying away, what you're bullish about. Is there opportunities also within this market? Because no matter where the market goes, the old saying, when there is blood on the streets, buy or something like that. Tell us, where do you see the opportunities, and what are you staying away from in this market?
Yeah.
Well, it's a great question. So I think, I think it was Jim Collins in one of his books that was talking about, if you do something and you stay to your core, it doesn't matter if market goes up and down, as long as you stay to your core and you continue that path, it will come back. So that's how we treat it. And let me explain, probably that it was my mistake not explaining the foundation or the fundamentals of the fund. We don't compete with the big boys. We don't pay a 5 cap rate. So far, we didn't buy anything that was below 7 cap rate. So what we buy is between $4 million to $20 million bucks. And what we buy is we're going against the current of the big guys. I'll give you, and that's, you asked me earlier about what does Barclay Street help Triumph, and it's my experience in I brokered myself over $500 million in deals over the years. So when we buy, if you remember, I mentioned that we buy neighborhood plazas. So we buy neighborhood plazas that have no e-commerce. Haircut, you look at this, tomorrow I'm going my haircut, right? They opened finally. You cannot get haircut from Amazon yet. You have to be there. Eva, show me your nails.
Oh, mine are natural.
Yeah,
I'm
but
a
you can,
natural girl.
but you can't get to the nail salon on the internet, right? We're going for the basic services. That's one. Number two, that not a lot of people think about. When I look at a plaza, I look at which side of the street it is, because how many times did you stop for a cart of milk on the way to work, and how many times did you stop on the way home when you get a call from your spouse saying we need this and you stop? So I buy it on the way home. I don't buy it on the way to work. So those are same is industrial. Industrial, we in those from Calgary that are, and I can see here at least one person from Calgary that I recognize. And in Calgary, we have a property, industrial property in South Airways, which is the older area in town in terms of industrial. But nobody is building today the 2,000, 3,000 feet base. So if you want to start your first, whatever store you want to start, whether it's, you know, mechanic or whatever it is, and you need only 3,000 feet, I'm your only solution in town, because everybody today, whether it's Remington or Hopewell, or they build 10,000, 50,000. The other thing is, when you look at the older industrial properties all over North America, there are what we call today almost inner city. So the land value is up. The land value is already there, because probably one day it will become a multifamily high-rise. And when it comes to office, we buy the B suburban product. We don't touch downtown. In any city we work, we don't touch downtown. We have over 100 tenants. Our biggest tenant is 8,000 feet, over 100 tenants. Why do we do this? Two reasons. One is, you know, if you lose one or two tenants, you still can pay the mortgage and you can still pay the property tax. Yeah, you have to reduce maybe your distribution, but that's a temporary issue. So that's number one. Number two is, we don't want to have a situation that, let's take retail and then office or industrial. So retail is completely changing right now. Some of the big boxes will disappear. Like, I don't think you need 100,000 Staples anymore when they do everything online. And they have today a warehouse outside of Calgary. That's where from there they supply with those small 5-ton trucks. So their stores, one here on 9th Avenue, becomes obsolete. So that is changing. So we don't touch those big box retail. We don't touch single tenant, because, you know, one of my first tours, I was in Phoenix, and the broker takes me and shows me a property, and it's a single tenant. And I say, I told you I don't buy single tenant. And he goes, it's a very strong covenant. And I asked him, is it better or worse covenant Lehman Brothers? Lehman Brothers, we all know what happened to them in 2008, right? So we don't touch those single tenant properties. The other thing is, I mentioned industrial and office. We don't want to buy an office that has one tenant occupy 50, 55, 60% of the total square footage, because if they leave, you have to take investors' money and put it in retrofitting the building. And that costs millions and millions of dollars. When we buy properties, we look at properties that have only cosmetic issues. We call it lipstick and you know, paint. But we don't, if it's a replacement of the roof or deep environmental issue, we're out. We're not using investors' money to do this. What we'll do is we'll change the pylon sign, we'll change, you know, maybe the awnings, we'll paint it better. That's what we do. So when you ask me what I don't touch, and I don't touch properties that have one tenant that occupies and is control of about 50, 60, or 70% of the income.
Got it. Got it. And how about, now the question comes to mind, how about these Amazon shipping centers? This is it's a new thing, and my ear is on the streets always. So that's a new investment that I hear a lot about that industrial spaces to then rent to Amazon or other delivery companies.
Well, those are, 1 million square feet, and we don't play in that arena. The only person who plays in the Amazon arena is my wife and my kids, that they order all the time. And I didn't order from Amazon even one thing. I'm old school. I want to go, feel, touch, try it on me, whatever it is. Call me old school. I don't care. I enjoy it. And I think we're coming back to that. As soon as we'll have 50% of the population vaccinated, at the end of the day, the human race is a social animal.
Yeah.
And in March and April, we heard COVID, COVID, COVID. What we hear now is Zoom fatigue, COVID fatigue, home fatigue. As one of my friends, he's also a client and he's also invested in the fund, said, I know a lot of guys that will pay $200 a month to get away from their wives. So I think we're all going back to work.
Yeah, no, that's true. When you talk about your specific criteria and your plans, it actually matches our business model as well. Kind of, we look for certain type of year built in the assets that we're looking at.
Lipstick renovation.
The lipstick renovation, the 100 to 300 unit. Now, historically, this market that we're in, that's between the 100 unit and 300 unit in these Republican states, the Sunbelt states, where these assets are built in the 80s, multi-tenanted, where there's not a need for significant renovation, but there is somewhat of lipstick renovation. Now, what that brings to my mind is, you were talking about not competing with the big boys. What we're noticing in the type of assets that we're after is that institutions are not getting involved in that niche kind of perfect sweet spot where it was between 20 and 50 million US, where it was too big for smaller groups and too small for bigger groups. But now those bigger groups are getting involved and actually acquiring these type of assets. Have you noticed anything like that where, in certain aspects where institutions are now coming in, or is the asset type that you're going after, it doesn't make sense for larger institutions to get involved with?
No, they're not playing in that arena. They try to buy bigger stuff. A lot of them are moving now to, be involved from the ground up in development, and then, but we don't see competition from big institutions, and what we see is sometimes competition from, wealthy families or other real estate smaller groups like ours. And that's, I mentioned earlier that we are not willing to pay the 5.5 and 5 3/4 or even 6 1/4. We're not willing to pay that because one of our key indicator is that we'll have enough money from each acquisition to have those quarterly distributions. And if you go below a certain amount of or a certain kind of percentage of cap rate, and the what's left after financing is you can't even send distributions. And distributions, as I said, it's nice to have them. It's not the it's not the big return on our fund. In our fund, the big return is when we sell, but it's a nice way to benefit investors, I would say.
And
Investors love that cash flow.
And you have preferred returns as well in your fund, as you mentioned earlier. So that's a very key part.
And in fund two, we also have the DRIP program. So a lot of our investors, they don't need that check that comes every quarter, which is a few $100 or a few thousand or a few, whatever it is, right? It depends on each quarter how much base rent we got. So the drip is the money stays with the fund and they increase the amount of units they get.
Oh, very cool.
So it's a
So
preferred that stays in-house
so
until the sale takes place.
yeah, so let's say you invested $10,000 just for argument's sake, and then the next distribution is $100, but you signed up that you don't need this money because you have enough money and you want to drip. So now you have 10,100 shares, and next distribution you have, if let's say it's $110, you have now 10,210 shares. So when we sell, you get a bigger piece of the pie because you increase your shares all the time. So that's the DRIP program, which we implemented in fund number 2. And I would say that about 65% of the investors went for the DRIP.
And they have that choice, or is that kind of this?
Yeah, it's a choice. It's a choice. It's a choice.
Right.
When we fill up the form, you check mark which one you want.
That's awesome.
We just
That's
love
really awesome.
receiving checks in the mail, so I'll
Yeah,
probably
yeah.
check off. No, we're going to open it questions for everyone. If you have any questions for David, please go ahead. And these are, when we have these, a lot of other groups have these webinars and what have you, but unfortunately they're not live. We have these live. So if you have any questions for David, go ahead and type it in. Please don't come on and we have some viewers that sometimes come on and say it verbally, but
I'm excited to ask David a couple questions that we always ask.
yeah,
our
before we
guests.
let us absolutely. I know you always love to ask those two questions that you always ask our
questions.
guests. But we also had a question as well, David. Is that now on your U.S. assets? Obviously, all of our investments are in the U.S. On your U.S. assets, when that distribution is coming back, or when the asset is eventually disposed of, when the funds are coming back, what happens with taxation? Do your limited partners, are they double taxed? Is there relief from double tax?
Great question. So we have a mother company in Delaware. Everything flows through Delaware. All the taxes are being done here, and the investor pays tax here. They don't deal with any U.S. tax. We have BDO is dealing with our property taxes, with our taxes per property and per the fund. The investors do not deal with the U.S. tax authority. I don't want to deal with the IRS. I'm okay with CRA.
And BDO is the accounting firm that you're speaking of?
BDO is just doing our US. Our accounting firm is Crowe McKay.
Got it.
Yeah.
Okay, great. And we have a question
We have
here.
a question here. It says, I have been holding REIT stocks on TSX. What is the advantage to hold your fund compared to the big REITs on TSX?
Great question.
Yeah, very good question.
Well, one advantage that I think is obvious is that when you are invested through the TSX, there are some market conditions that the REIT doesn't control but impact the value of the share. So if there is a market goes down, a whole as a market, the value of the shares of the whole market goes down. It has nothing to do. Last year, REITs, shares went down because everything went down, even though the real estate was still good. So it's an impact that is not just per the investment itself. So yes, you invested in a REIT, but the share price is influenced by everything that is around that REIT in that TSX or any other stock market that you are involved. That's one. Number two is I think that one of the comments I received and many times is usually when you come to public REITs or public companies, you cannot have direct conversation with the GPs and the board, which is exactly the opposite in the exempt market. We're always available. We do quarterly calls with our investors, not just with the DRs, and so that's our kind of in our fund. It's the real estate that is not impacted by whether oil gas went up or down, because we have properties all over. So that TSX or any other stock exchange has a big influence by everything that is there. It's one big package. So that's the big difference, I would say.
It's influenced by the market rather than the specific deals that the fund has within itself.
Or specific industry, yes.
Yeah, we have a question from Clint.
All right, so we have one question up here.
Oh, yeah.
Yeah,
let's do that.
so do you have any foreign exchange rate affecting your investments, and how does that affect the ROI?
Well, so far we had no issues with our foreign, because it's only the US and Canada, and we were following the exchange rate on a daily basis. On the contrary, it was in our benefit, because we collect in the US in US dollars, and when we convert them, when we brought the money to Canada, we made 27 or 30% just on the exchange, and we're able to give more money to the investors. We love the US market. We're going to keep on investing in the US. I have to admit that they are very, very business savvy over there. They want to do business as soon as possible. During COVID, they were faster than any Canadian tenant we had to go back to business and pay full rent and be active again. So we love that market, and we're going to continue. And so far, the exchange doesn't make any impact on us.
Especially in those states like Texas and Arizona, they're very business friendly. Republican states, they don't even care about masks. Those guys. We have a question here for you, David. So, do you see the questions by any chance, David, or would you?
Yes.
Maybe this.
I see Clint, my friend Clint Rogers had a comment there.
Okay. Can I read which is the next? It's a complex question. So, support why? Okay, yeah. So we'll that's more of a comment. We'll deal with that. We appreciate that. So yeah, if any more questions, please go ahead. But anyway, if you like, what we've done is we've actually I put David's LinkedIn contact, message it to everyone if you would like to get in touch with him. He's a super nice guy. He's also got a great sense of fashion. We're wearing a very similar shirt, so definitely get in touch with him. But yeah, please, Ava, if you'd like to ask the questions.
Of course. So David, what would be your number one advice to passive investors? And when I say passive investors, of course, I'm talking about people who don't want to be involved in the day-to-day operations of the business. Rather, they want to be the limited partners.
The number one, it's all about management. It doesn't matter what you sell. It's about management. If it's the right management, track record, check their track record, check what they're doing, check their fees, check whether they, walk the talk and put their money where their mouth is. There's nothing better than that.
Excellent advice.
Incredible. Now I have another question for you. What would be your advice to active investors? And when I say active investors, I mean people who want to be part of the operations of either a fund or the project and are newer to the business.
It seems easy from the outside, but when you get a barrage of tenants with problems, or property with problems, or have to deal with expenses and have to deal with things that surprise you right, left, and center, then you can lose a lot. And I'm going back a few years. If you remember, in the early 2000s, the syndication model, or not just syndication, sorry. I won't mention names. You know what? I can mention names because some of them disappeared. So we had concrete equities and platinum equities, and they were the people that were running it were very active, but they were people that knew how to raise money. They didn't understand real estate, and they bought the wrong real estate. So if you want to be an active, you have to understand and focus on that market segment you want to be involved with. So you asked me earlier, August, or you mentioned apartments, multifamily. I don't touch it because I never done it. I don't understand it. I don't know how to deal with it, and that's why I don't touch it. I don't touch hospitality for the same reason. I don't touch the stuff that I don't get. I know I've done over, as I mentioned, I brokered over $500 million in industrial, office, and retail. I know that. I know to analyze that. I know the numbers. I know the problems. I see the problems when I get the first, package rent roll. I can tell you what questions the banks will ask because I've done it for 21 years. So it's like everything else in life. If you want to focus on something, you have to focus on it and not just do it as a side job, because you'll lose. If it's a side job, be a passive investor. You'll make way more money.
Very
Great
true.
advice.
Great advice.
Very great advice.
We really appreciate that. Well, thank you so much for your time, David. We really appreciate it. We hope to
My
have
pleasure.
hear all about
If you-
how well your funds are doing, and I'll definitely get on a call with you to pursue the possibility of also diversifying our investment in one of your funds.
Definitely.
So we really appreciate. Thank you again,
Yeah, thank you
and
so much for
thanks
your
everyone
time.
for joining us. And have a great rest of your day, David.
And I have two friends here, David Deal and Clint. See you guys, and thank you all for attending. Thank you for inviting me. And by all means, if you want me again in the future on other stuff, by all means, I'm here for you.
Thank you so much,
Thank you.
everybody.
Thank you.
Okay,
Thank you.
have a
Bye-bye.
wonderful day.
Bye-bye.
Bye.